A very good morning to all our attendees on a half-term break as well. So welcome back to Pachu Facilities Management Market Awareness webinars. So before I get into the topic, I just thought, hope you and family are well and healthy and others, because we are living in testing times. Nobody thought this is going to continue this long, but looks like this is going to stay with us for some time. So work is work, but please do look after yourself and stay safe, stay healthy. I thought I'll start that with that note. So let me continue. So we have close to 30-40 slides here, and as this is not a subjective analysis on futures of what's going to happen, future of work or future of workplace or future of industry, etc. This is based on real conversations with people, and it's based on data. So with that note, normally the way it works is our webinars, we have very small group of attendees who join live, but we have a lot of attendees who catch up on the recording. So if you are listening to this recording later, welcome to the recording as well. So welcome, and let's begin. So some of the information, or most of the information, you can really feel for it, of what's happening around you, but thought I'll consolidate and share the insights with you. So take a step back, have a cup of coffee, and let's go through what we are looking at it. So this is where you are. Let me open up my video as well. Okay, that's it. So where we are, I think the very first thing that I suggest we look at here is the recession curve. Nobody know whether it's going to be U-shape, V-shape, W-shape, or L-shape, right? So that's where we are, because it continues. So the three key points that I strongly recommend us to look at it with that lens for the entire 40-45 minutes is through this. Number one, there is a shock to the economy. COVID is a shock to the economy. We know there is a lot of government schemes that hitting us on varied levels, but whether it trickles through into community is a question mark. But they are doing their best to do what they're doing. That's a shock to the economy, which means in the UK it's more than £1 trillion pounds in debt for the very first time, and the socialism, not socialism, the agenda, whether even you'll see the meals for the children coming up, because that's the market. There is a huge shock to the economy. That's number one. Number two, that there is a reaction to the shock. The reaction to the shock, what we saw is what government is going for the shock, right? What reactions that they're doing for it. But based on those government reaction, others starting to react to it. That's the reaction to the reaction. You're allowed to go back to work. You're not allowed to go back to work. This is your furlough scheme. You are not allowed to use the furlough scheme this way. And there is a lot of people who used it in an unethical way. Let's put that way. But what you're going to see for the next 2 years at least is the shock to the economy will continue, and the reaction by the government, reaction to the market, reaction by the providers, reaction by the buyers will happen based on government's decision. Then depending on the reactions that you made, your supply chain, your people around you, your buyers and everybody around you will be impacted by that, right? That's the core crux behind this whole thing, which means the whole market now will be very, very reactive, super reactive than it used to be. So that's the very first thing I want to land, and that will be the concluding mark from me as well. So this is not the first time that we're doing, we have the data points behind what's the outsourced market in the UK. That's close to 12,000 opportunities, sector by sector. Public sector, private sector. Inside public sector, split by 7 categories. In private sector, split by 9 categories. We have done tons and tons of webinars on that. Way back in May, when we had a very first, what we call an unprepared conversation with our trusted community, we launched something called Drift the Curve. Drift the Curve, the curve is going to come out, guys. We don't know. We actually pitched it wrong ourselves. We said the curve is going to come out. It'll be okay by September, October. So it's like, how can we drift the curve, and how can we avoid the curve and continue to progress? But now the conversation is very much into how can we go with the curve? How can we lean into the curve? How can we survive or adapt, observe, accelerate? That's some of the terminologies that we'll be using consistently in this conversation. So the unprepared. So if you want to know the market, there are some things in our control and there are some things outside our control. So the reactions to the reactions to the reaction to the environment, etc. It's something that's slightly outside of our control, because when we are asked to go back home by 10 o'clock, we have to go back home by 10 o'clock. But there are some things that are still in our control, which is this, the market data. It's not going to change. The opportunities that's been outsourced in the market will come back at some point or form. And it took a little bit common sense from both the buyers and the providers to come back to this normality of what's in their control, because before they were busy reacting like every other business, every other organization, which is very normal, including us. Survival first, then we move into which category do we fit into. So if you are looking into a little bit more data about what's the facilities management market as a whole, what's building services opportunities in there, what's the range, which sector do I need to operate, all these webinars are there for free. Please do go access it. And we have close to 1,200 colleagues who access this from May alone. As you know, people normally find us, people normally come back to listen to that. So this was 1 month into COVID. So there is one webinar which I very much like you to go and have a revisit. It's getting to 1 month into COVID. This was in May. Very first thing that we did, and end of April, I think this is a time where we had NHS call for heroes. We were clapping the hands, the Nightingale Hospital and stuff. It looks like a far cry now. It looks like it's a long time ago, but what did people do around it? And then come back and re-listen to what I'm currently saying. You will see what's changed, what's not changed. I thought I would land that. So as I mentioned, these are some of the stuff that came out. One was how can we drift the curve? The other one is how can we lean into the curve, right? The first one is drift the curve. Okay, the conversation was like, what should we do? What are the things that you need to take out on the cost improvement side so that you could survive until September? Now, these are the sectors that has impacted immediately, as you know, and these are the sectors that will rebound with what we know. These are some of the conversations that we had that made help people to decision, and it is the same thing people are having. Fast forward, in August time, when we are hitting the wave two, we came out of that. We all were eating out to helping out, and then the COVID started to come back, wave two. So the talk more about into, okay, looks like there is some acceleration that's required on digital transformation, where there were lots of people, interestingly, who are talking about digital transformation with very, very little digital mindset, which means they want to be themselves. They want to be a cleaning provider. They want to be a hard services provider. They want to be an IFM provider, but they talk digital. But if you go and look what they actually been doing for the buyers, nothing at all. It just like, I talk digital, but I do very less. But there is a push that happens towards digital because that's what the customer wanted to see. And most importantly, the new operating model meant like, things started to go, the furlough scheme was in place and things started to go slightly odd. So how can you sustain in the new environment? And this is where interesting companies who were cash rich were looking to buy other companies. So interesting companies who were into survival mode, let me be very clear, also went into acquisitions, because if they exist themselves, they will be doomed. They cannot survive longer, so they need to become larger than who they are, so that they could survive. So that's how the market panned out. Then you saw a few other bits that was happening as well. So it moved out of NHS. Then we see the next phase of COVID happened, furlough scheme happened, and other things. Either way, what you're going to see here is there's a lot of debt in the market. There's a lot of debt in the market. So the financial resilience and other things would happen. So in between, who was the lifeline? It's the government. We touched that, how government test and trace alone pumped close to 12 billion pounds of tenders in the economy in this 3 months alone. So the conversation moved from 1 month into 6 months, and it was more or less about, hey, you know what? Let's the curve is a curve. It should be fine. We withstood 2008. We withstood the dot-com crash. We have seen enough. We will be fine. But this is a very different ball game, as people were working from home. That was 90% in April, but now it's close to 65 to 75%, depending on the regions you're talking about. But at an average, it's still 75%. Let's not talk about future of work and other things. Let's go back to the reactions of the players in the market. Again, this is not just restricted to FM. If you are a listener, we're just going to pick it up from the justice market, from the welfare market, healthcare market, exactly the same. But our data points covered a lot more FM players. Again, close to 85% were FM players, but the reactions or the approach was more or less the same. So this is where we are now. We are in a state of what we call a VUCA, which is volatility, complexity, uncertainty, and ambiguity. We are in this, and this is going to continue forever, which means decisions that we make, we need to have a fair understanding of direction of travel, but not necessarily it will be quarter by quarter or month by month targets and stuff. Those are gone. So you might have a sense of direction, and you might have some understanding of what you will do in the next 6 months or so. But when I touch it, I'll let you know, most service providers are only talking about 2022. So they're not even talking about 2021. 2021, they want to continue to see it through, and then see what we can do to 2022. That's where the market is. So we already touched it. On the second part of the conversations, we reached out September and said, hey, now we have done this, what do you do? And these conversations didn't happen just phone call or a Zoom webinar. It happened on a multitude level. As you know, this is who we are. If you listen to a market awareness webinar, and it just started from one relationship, and from one relationship, multitude relationship. But today, we call ourselves as the market development and sales development specialist for FM players. It only started in 2016, and then it just went up all the way now. So without getting boring, you can find more information inside our website. So we are predominantly, insights, strategy, sales development, and market development for the FM guys. And all these things happened when we collectively built a lot of relationships in the market who became a trusted advisor to us, and they started to share more. COVID brought us even more closer because the access points were much more easier, where we don't need to book a meeting through a PA and others. People were available on a morning, evening, weekend basis. That was positive. But now, as it's half term, and people are still working late. So the efficiency, productivity of the people have come down drastically. There is enough surveys on that. The most important point is we had access to it. And the collection of information, what we had is a multitude level. Number one, we have the database of opportunities, which means we know who's running what contract. Pretty much it's real time. We update it on a monthly basis, the only database that exists in the market, which means you will clearly know in the past 8-9 months, from March onwards, 7 months at least, there was very less information about who's winning, who's retained the contract, etc. So you might find enough information up to May that people were clapping hands and heroes, and we love all of the cleaners and other things. Guess what happened after that? Nothing. People realized all these were gimmicks. I'm very, very honest in this webinar. That's what we're known for. And now they just went back to do the same things that they used to do. So we had a list, in which means we were able to have the conversation based on data and say, hey, you had close to 60 opportunities that's coming for renewal this year. How are you doing on that? And they said, hey, this is what we did. This is what we managed to do. These are some of the things we extended, some of the things that went to the market. But either way, we had a database that helped us to have the conversation. Then we have the largest collection of bids and proposal results in the world through our Scribble learning platform, which meant we nurtured close to 460 UK bids, sales, pre-sales, project program managers in UK, part of our self-care program, and those guys were furloughed off, which meant, we also got some touch points through people who were doing courses with us who were furloughed off, and people who also been made redundant, who were looking at the access to the platform to beef up their professional development. So the conversations continued at that level as well. Then, as you know, we have podcasts where we talk to very senior buyers in the industry, as senior as the Chief Commercial Officer of Crown Commercial Services, Home Office, Foreign Commonwealth Office, FC. Then we have MOJ, MOD, Test and Trace, you name it. to understand what actually happened in the government between April to here on a more informal basis to understand, hey, how did you cope with it, right? So the conversation is done on a multitude level, not just a general Zoom calls. Then what we did, we left our two bots, and then the two bots started to monitor the brands of what they were doing in social media, not just social media, but on a much wider basis. Okay, if this is what the buyer wants, as you know, every sector started to say different languages, and then the service providers were talking different languages. We were just keeping an eye on a bot that tracks the brands and see what conversations are they actually telling to the open world. Then the bot also tracked the conversation that happened outside the real world of social media, but beyond the social media, whatever posting, the news articles, what leadership articles were they writing, who's who, what, which leader was talking what, etc. So the conversation was not just subjective, the conversation was also objective. So it was very fascinating. If we look at, as an example, as an industry body, if we look at what IWFM or IFMA or RICS were doing in the 6 months, I think we should be slightly embarrassed with the amount of work. Be very honest here again, when the whole focus was on FM and focus was on buildings, focus on what we were doing, I think we lost the plot there, my honest opinion, because that came out pretty strongly from the conversations that we had from this. What's the collective one voice that's going to help us to take it to the government to get what we want? I don't think there is anybody. So they have to use the CBIs, the BSAs, the IODs, etc. But funnily enough, we do have an industry body, collectively. So either way, the conversations was there, and then we tried to document the conversation. This is the numbers that I want to share, part of this conversation. So who are these guys? What's happening here? So the number of people out of the 126 guys, as I mentioned, 85%, close to 100, were our FM guys. These are group sales directors, chief execs, managing directors, chief operating officers, so and so. Informal conversations, formal conversations, etc. So where they are, again, this data point is as of end of September. So what happens here is we are bucketing them into three categories. The three categories will remain the same, but the proposition will change because the survivor today will be moving into observing tune, because again, most of these details we'll be benchmarking every 3 months from now, every 3 months from now. But for now, these are the three buckets that we are looking at. Number one, survivors. Who are the survivors? They are playing defense. Everybody played defense between April, May, June, because this is all new. The very first thing that we do is we cut the cost. We furloughed staff. We went back to our own accounts and say, guys, you know what, this is coming up for renewal, and shall we extend it? So the reactions happened. We will touch that later. Surviving mode, massively disrupted. There are sectors, as you know, some sectors, if you are exposed niche provider in those sectors, massively disrupted. So it became survivor. We will touch those sectors as well. Next one is about observers. The observers, these are the people who were surviving, but then take a step back and say, now, you know what, let's go into airplane mode for the next year or so. We will tactically react. We have streamlined our process. We have streamlined our sales teams. We've streamlined our operations. But from now on, we are not going to make big decisions. But if we continue in this rate, and they might get into the survivor mode very soon. But some guys would like to move into the accelerator mode. So either way, majority of the sectors, 2/3 of the market, so close to 70% of the market is here, is totally here. Which is normal because things change every month. Government changes rules, policies, procedures every month, and there's still not much clarity on when we'll get the vaccine, or whether people will be allowed to get back to work, and you name it. And COVID wave 2 is rising. So when all these means, like you control how much you can control, and then without spending much cost, without spending much thing, you go for it. But then there is always top 10%, right? The top 10% who will always try to use this opportunity to just say, hey, you know what? These are companies who are already digital. These are companies who already mind their accounts really well, who already have a very strong relationship with existing accounts. When this happened, they were able to demonstrate to the existing customers how good they were, right? So what that meant is they were becoming even bigger during this crisis. One provider actually added 70 million pounds in this COVID, when the others were losing big time. right? So, what this meant is the market leaders, as we called it, they adapt and they executed strategies. This is the first thing that I want to land today. So the overall principles of Axel, how, so the fascinating part is how does survivors behave? How does observers behave? How does accelerators behave? This is not just constrained to the service provider community. This is also constrained to the buyers actually. If we look into that, um, how did NHS behave? Are they observers? Are they survivors or the accelerators? How did the local councils behave? And how did the central government behave? And how did the schools, universities, the big building real estate companies, you behave? You go, 3 weeks ago when I was in central London, I visited some of head of properties. Guess what? The number of cleaners and engineers in the building were more than the number of employees in this building. And they have a massive three-store head offices. These are big financial services, right? So all these things meant, they our buyers also fit into this community. This analysis doesn't cover who the survivors or observers or accelerators are in the market, but we'll also touch who is impacted. This is the very first thing I want to land. Again, the survivors, observers, and accelerator percentage will move in the next 3 months, but the categories, I believe, will still remain the same. So, um, some of the thefts, this went back because some of the companies are multinational, so we kind of kept it, slightly generic and slightly big. So what happens here? We know hospitality, entertainment, consumer services, big time, got hammered. Then we had healthcare, manufacturing, and basic material, the consumer goods and stuff also got hit, right? Then we had oil and gas, schools, higher education, universities. Then we have industrials, consumer products, retail, which is not food retail. And then you have logistics, transportation, utilities, construction materials. They are somewhere in yellow or what we call amber. Then we had professional services, financial services, telecoms, technology, what we call regulated industries, food retail, etc., is positive. So what that meant is the exposure of COVID to different markets was very different when these guys, and if your buyer is in these sectors, obviously it impacted them massively. So your buyers are red are the survivors, and your buyers in all the way in yellow are your observers, and the buyers who are in the green part or your accelerators. So if you could be an accelerator, but if your market is a survivor, then you are just coming down with the market. That's why many providers are trying to understand whether they continue in the existing market or they can move into adjacent market, or they could go into different geographies and altogether, all different segmentations that they are trying to do. So what happens here is, out of all these things, the biggest player who's missing that in the previous chart is the government, because collectively they have given close to 12 billion pounds or 16 billion pounds, sorry, 12 billion pounds outdated as of September. So 16 billion pounds in this COVID alone. So what that meant is providers who exited the government market last year or 3 years ago when the Crown Commercial Services Framework came through, sorry, these are commoditized, it's a race to the bottom. All those things were actually are now thinking, why did I do that? Because the only entity which provided lifeline, as they call it, to many of the big outsource providers is these guys. If the central government didn't offer this many contracts, especially test and trace, as you know, is multi-billion pound contracts, and it was given to integrators, big integrators, without naming names, you know who they are. And it's just managing a facility, doing logistics. But are they the right people? Question mark. Does it require a lot of skill set? Can't we do it in a better way? There's a lot of questions. But either way, what happens here is when the bounce back loans and the other loans were given at varied levels, my personal view is this is a kind of a loan or something that was given to the bigger providers. Take these contracts, run these contracts, at least survive. So that's it. So that's my personal view. And what we are seeing here is the number of contracts that was increased by the government. It was still going on. So what we see here is these are the contracts that was given to at varied levels, and most importantly, most of the contracts were direct awards. So direct awards is there is no tender. You take it, you run with it, and after that we slice and dice, and we'll give it to the wider supply chain. So when the market was reactive, you do expect tenders to come out to the market. A, if you are a reactive company, that didn't work. B, the second reason is the market also didn't receive lots of tenders because most of the tenders were renewed. So the survivors were just scratching their head and thinking, why is it not coming? And anything that was coming in, they were actually reacting to it. And they were just doing what the old Caroline used to do, or what they were supposed to do in 2008 to 12, where you just go for the cheapest margin, you just go for neutral margin, zero margin, just to get something to have it run. So those practices came in from survivors, whereas observers, they came on the second wave of supply chain, whereas accelerators, luckily, they were already in the government market, which means they were able to proceed further. None, with no strategic direction, no strategic planning, they were in the right time at the right place. Go get it, go for it. So this is the market, which means, again, let me go back to the same point. There is a stress in the economy. When there is a stress in the economy, there is a reaction to that stress. And then for that reaction, there will be reaction. Think it from that perspective. You're going to mine a load of opportunities, loads of markets in it. So what happens is, the buyers slowly, the question moved into, how can I approach this property rationalization or localization, or optimization, you name it, and moving into not talk digital, but let's do digital. So it is moving on, and I already touched, number of procurements is massively slowed down, and most colleagues are looking for opportunities from Q2 2021. That's where we are. And in addition to that, as you know, if we look, most of the providers are here. You see empty offices everywhere, and you see schools or universities, or some are open, some are not open, and you see people reacting to it. The reactions is not just towards the businesses; it's also people wearing masks, not wearing masks. And what control do you have? The 2 meter distance, 1 meter distance. All these things meant, like, things are super fluid, and the buyers are seriously thinking property rationalization. So when you talk about future of work or future of workplace, it's all finger in the air. Nobody can do. You can sit and do lots of index, lots of surveys, but honestly, you know what? You won't get clarity until Q2 2021. So we already touched some of these things, but let me go again and then say, if we bucket the providers into survivors, and then survivors, accelerators, and observers, then you also see some of the buyers taking different roles as well. Um, so we touched which sectors have been hit most and which sectors are also trying to increase demand. But what happens is, some of the buyers, they lost 30% of the furloughed employees in public sector or procurement officials. 17% of the people who have been made redundant in the private sector, from our analysis, are BT. You can really see where this dynamics goes. A, the number of tenders are going to be low, procurement guys are gone, and B, you have the big guys who used to churn all the growth for these guys has already been slaughtered. 17, in some cases, it's up to 60%. 60% of the bid or the sales and marketing workforce has been slaughtered, but they knew this is how it's going to go. But on the other side, which you'll touch later on, the accelerators has actually beefed up their marketing. Their accelerators are beefed up to do things slightly differently. But some have just using their muscle power, but some are using strategically. But either way, you are seeing reactions coming out of the market. So luckily, for many providers, they were able to at least renew 7 out of 10 of their existing contracts, 7 out of 10. But the very worst were able to renew only 4 out of their 10. But if you take mostly, but the very best have done 9 out of 10, because one, it was already too late that they weren't able to renew. So we'll touch renewals in a bit. But what that meant is, you see average, our observers more or less done 7 to 10, accelerators 9 to 10. The survivors were only able to do 4 to 10. Why? Because they were never focused on renewals or account management. Their whole engine, these are big players. I'm not talking about a local SME run by a family. These are big players. Culturally, they were not driven to manage accounts. They were driven only to gain new logos, new customers, which means they were not ready. So when these things happen, the whole pipeline drained, And what happened? Account managers start to struggle because there is no culture of account management, or there is no culture of working through, which we'll touch. Either way, there were reaffirmers, there were truth tellers, there were killers, and there were realists. This happened in May, and then government came out with lots of PPNs. As you know, again, government saved a lot of people. Here we go, guys, get the payment in advance, get most of the contracts that we have or renewed. So that meant government more or less were reaffirmers in the market, where private sector took varied roles from reaffirmers all the way to realist. And some very solid providers work with the buyers to just enhance the contract, reduce the cost, and added more capabilities. They even reviewed the supply chain. Many more on the trends and other things outside. But for now, this is how it happened. So we touched the shock to the economy, we touched the reactions, and then we also touched reaction to reaction. So what's going to happen more and more is we are going to see some new entrants in the marketplace. People who were not cleaning providers will try to do cleaning more. People who were not playing in the real estate market will be entering real estate. People who are not playing in the universities or schools will be entering that. People who are not doing what we call um, the government side will also enter government side. Either way, those are adjacent market. But most importantly, everybody will try to move up the value chain, move up the value ladder to try to find more profitability in the market, to have more diversity in the market. That includes the SMEs and entrepreneurial companies. That's where you will see more of the people, and most of the companies got exposed when they talked digital, but they weren't able to ready to do the digital. But some who successfully did it were able to gain more. So what happens here is there will be a quick head start for accelerators for the next 18 months, out of which 3 months have already done. So for at least for the next 15 months, which takes us to next year end. So these guys will try to go more and more, whereas others they won't. So that's what you're going to find, where I will show the graph of how things are going to be pan out in the next market. So when somebody says the FM market is going to grow in next 3 years, 3%, 4%, those are bonkers, because there is no FM market that's going to grow in that way. It will be based on the reaction of the buyers, reaction of the service provider. It's totally reactionary market, totally reactionary market. So it's here. So when you look at it, let's say, okay, digital evolution, there are three things that happens. One is everybody talks about digital. So if you're not talking digital, you are not in the market. You will not be able to survive. So very basic language is digital. Next one is the buyer and customer experience is totally outdated. So people have done incremental improvements to customer journey, but very quickly there will be a big bang, which is like, what you have been doing before will be very different, which means the way the contracts have been outsourced now. Can you come back, manage it by square meter price? The cleaning people, I want people to do cleaning, by SFG20 and stuff. Wait for a year. It won't be based on the number of hours of people utilized. It will be very different, where how much data are you mining, how much sensors, how things are going to manage. 3-4 years ago, already sensors were pretty much established and people are talking technology and stuff, but now COVID will accelerate it big time. The way the customer experience will come out will be very different. Again, these are not finger in the air. These are not finger in the air research on technology. This will be totally real. And people have already demonstrating that. And if you're not capable, they're willing to go with smaller tech companies who are not even an FM, because the facilities management is now totally digital. But if you're non-FM, still, if you're providing frontline services, people-based services, reduce people because they are not going to come to work anyway. They'll be working from home. So how can you manage everything digitally? So what that meant is the people who will be calling themselves facilities providers will be very different from today. Write it down. Will be, and rather than guys who call themselves traditional pure play players, I'm a cleaning company, I'm a pure play IFM company. You know what? It's going to be very interesting marketplace as you're coming from. So virtual sales is, people love to meet, greet, and talk about pains and needs and motivations to close deals. But today it's all been done virtually. And what that meant is, the number of Microsoft Team meetings, people are drained by back-to-back meetings and stuff. So yes, the overall productivity efficiency is down because people are not producing enough. Everybody is drained, let alone 7 months isolated, comes with its own mental health issues. But Important thing is virtual sales is here to stay, which means how quickly can you help your clients to know me, trust me, then buy me, most importantly, like me virtually, let alone then have the conversations to have to people will determine how successful you're going to be in the sales cycle. Because when we're having the conversation, 99% of the conversation is just conversations. The conversation is just like waiting game. It's going to take 1 year, Pascal. This is what we're going to do. It's honest truth conversation. That's where we are. Because we knew when somebody does show off or somebody does it, it's not true, because that's not what the market play, because they are playing around the overall wider market segments. What you're going to see here is more and more companies will be pumping contracts, and we did ask quick questions about how much are you spending in marketing. Many companies don't even have a marketing function. It's a salespeople who do marketing, but now they're going for marketing, but marketing doesn't understand how the FM sales work, but they're just pumping out lots of money on customer segmentation, this bang, this advert, that advert, etc. Either way, once they realize that the money is wrongly spent, they'll come back. But either way, you're going to see here the marketing, regardless, marketing is now improving, but it's slightly higher for accelerators, somewhere mid-range for observers, and slightly low for survivors. And the only reason they're doing that is these guys historically used to attend lots of events, and they go and give their business cards, do all these stuff, but now nothing happens. You have enough webinars that happens, including ours. We just started now. But what that meant is relationship takes slightly longer because the face-to-face conversation doesn't happen. But if these guys are working on a month-to-month target, it's not converting them. So it's account managers who are more preferred than the other guys. So let's go. So what happens here is you're going to find a very defined FM growth that's going to grow in the market. Some guys will be still continuing to make 2%. Some guys will be going below 0% or keeping 0%. Some guys will be pumping up slightly higher. So wait, there is a much detailed article I wrote for my IFM colleagues around this. So, if you are an IFM member, you can read an article exclusively written for IFM end of this week, or early next week, whenever that's been published. It's about how the people have done this on market development. So I don't want to reiterate that. So I'm not going to talk about that. Exclusively it's written there, and I'll talk more deeper when I share about the same topic next year in Workplace Futures for IFM. But for now, these are the three things that they're doing. They are reassessing the revenue growth strategy. So what changes must be made over what time frame, which means, as I mentioned, it's not rigid. It's not a 3-year midterm plan. It's a fluid plan, but structured around some high-end principles. Then they are reimagining the growth engine. This is the sales, marketing, and account management function, including operationals and what's possible in the new landscape. And the third one is reallocate resource to drive execution. So these are some of the three things that they are doing now. And as I mentioned, the details behind it is in the IFM article. So just go and read that. But I'll just pick up some of these things. So what happens here, we already touched most of it. We touched what many companies tend to have pipeline, but the pipeline of predominantly potential customers and new customers. They didn't even had who are providing the services for their own portfolio of clients. Can I do white space analysis? Can I do cross sell, upsell, etc.? They were still waiting for the OJU notice to land in it. They were just trying hard on LinkedIn and social media and stuff to build relationship where easily they could have mined from existing clients, and from them they could have got it. That's what exposed survivors to observers, observers to accelerated. So very first thing is the bid pipeline was just not new opportunities. The bid pipeline predominantly included bigger companies. So what that happens here is I'm just giving you a few principles. These are basics you might already know, but it's good to refresh, and it's good to see how people actually did or didn't. So based on the accounts, then they segmented into who are the key clients that they have, and they bucketed them into strategic, star, status, and streamlined customers. These are the terminologies here. You will find that you have your own terminology, which means depending on the spend of the customer, these are the top 100, these are the top 50, these are the top 30. They just went and segmented very niche, whereas other people were cooking. Let me go and identify all the companies in the world who will now need FM services and stuff. let them go and find an analysts. Good for them. But focus is on, guys, 12,000 opportunities has already been outsourced in the market. That's 85% of the market's already been outsourced, right? We have the list. We have been giving that to the many leading providers, and we have done strategic planning, etc. with that. But from your side, who are your key customers, who you want to work with? A simple square based chart. That's how differentiated them. Then they very quickly streamlined and understood, okay, we need to map out the organization structure slightly differently now. It's not just going to be sales driven. It will be needing mapping out with our key clients and key customers, and we need to have conversations, that's it, conversations at all levels, so that we can help them not just on the FM side but on a much wider side, procuring whatever they want to have, PPEs, hand gels, you name it. Don't worry, we will do that for you. We will be your extended procurement arm. Anything else, if you want to do surveys, real estate designs, workspace utilization, don't worry, yes, we are a cleaning company, we can help you with that. So, well, for all these to happen, they started to come on them. What that meant here is, you are these are basics, I understand, but believe me, these are the make or break for success in this environment, and these are what accelerators have done. I'm just trying to share some of these things. What happens here is they've just carved out a very important hybrid model where many companies, they didn't even have account people because they were predominantly salespeople, and their operations directors were running their accounts. They are operations guys. They can run the contract really well, which is amazing. 2 KPIs to ensure that they are not leaking money on that. But now they also got a couple of other people, especially on the first two customers, segmented customers, the star customers and the strategic customers, to just say, hey, we will work hand on hand with you. In that way, we will give you the most. So there was one person who was allocated, but accelerators allocated 2 people. So one keeps on talking about how can we help you. The other person keeps delivering. These are the help that we thought we'll do for you. And let's deliver. The operations person keeps the contract. Account people keeps the conversation. Project person delivers the conversation. So they did it. And this is another thing. Nobody were prepared for this many renewals in the shortest span of time. So again, many people question themselves on, do we know what are the contracts that's coming out to the market? When is it going to come for the market? Everybody, as I mentioned, either it's 4 out of 10, 7 out of 10, or 9 out of 10, they renewed it. But the experience of renewal was horrific because they didn't have enough data points, because renewing a contract means you need to know the operations, you need to know what new solutions in the market, and you need to know how you can keep them going for the longest time. So what that meant is there are lots of lessons that was learned there as well. So this is a very simple question. What that meant is many companies, the reason they're not even talking of big on growth is this, because yes, they can grow consistently 4%, 2% on organic growth. But what happened is they also lost contracts, which meant if a company with £100 million business with have 1/3 of the revenue that's coming for rebate, and if their success rate is renewing is only 8 out of 10, which means they are losing £6.5 million. These are very basic, Max Bhaskar. Why are you telling that? Believe me, this is where many companies went wrong, because they weren't able to renew, which meant their top line growth is not the same as they projected. And it was much easy to retain customers now and for the next 12 to 18 months at least, than actually go and win a new business. So this is where many companies, where they were originally planned to grow 2 to 4% or 5 to 6% or 10%, have to grow double the amount because they lost a lot of contracts. So I'm not going to go deep on this. It's like collectively they all are looking into that. So let me quickly finish this. So what happens here is, even in this crisis with a lot of success, as I mentioned, 100 plus contracts were actually terminated, close to 100 plus contracts. This number was high as of May, and I thought this will increase to 500 or something. Out of 12,000 opportunities, 500 is very small. But 500 contracts that's coming up in the next 3 years, and if those contracts were terminated, that they are lost. But good news is, post July, June, July, August, September, there weren't many contracts that was terminated. The numbers were still slightly incrementally high, but it's still the case. The case was the insourcing was also not really working, because with all this stuff that's happening around, insourcing to do what? You can control the spend, But if you want to exponentially differentiate, transform your existing operations, you cannot do it yourself. You do need to have an expertise there. So what that meant is the insourced contracts came down even on the government side, but the lots of frameworks started to kick in. Even today morning, you will know the Fusion 21 came out. What that meant is you're going to see lots of frameworks that's coming up because people want to have options, but at the same time, they want to have some flexibility in who they want to work with. So both on NHS, local government, on the government side, you're going to see lots of frameworks. Even the next phase of the CCS framework on Crown Commercial Services, FM framework, marketplace, market engagement will begin as early as next year. So lots of frameworks coming into the market, but keep what you got and do what you need to do. And we already touched this. Again, if we look 1 month after COVID to now, this is what happens. But most the sad part is 40% of the furloughed employees were made redundant. That's the sad part in our sector. So that's sad because, and those guys, especially now in another 2-3 weeks, the furlough scheme will be coming out, or end of this month. You will see the number is only going to go high. But some have got, some have moved on, but it also gives people to do different things. But either way, the new bid environment is drastically different to what it is. But now it's no more drawn-based site visits and stuff. There is some sanity that's coming up where site visits are still happening face-to-face to a certain extent, but it is what it is. It is what it is. Again, I'm not going to go deeper on customer segmentation. We already touched that. So every buyer has a varied level of COVID-19 epidemic, and understanding the buyer means you have to understand your existing account and understand the buyer through existing account. The more you go out, more you go to the existing new player and try to understand the market is not going to take too far. This is the time to get closer to your customer, even closer to your customer, and then go with that. These are some of the stuff what we advised and what accelerators have done, which is like, okay, who can I partner now? As I mentioned, we don't want to play in the same sector again, but if you want to play in a different sector, we do need to have a reference point, or we do need to have a technology partner. We do need to have people who have the capability, all this stuff, account segmentation, revenue marketing, sales management and coaching, different way of working. And then and then org design and coverage. Then on this side, different type of talent, customer experience surveys, your deal flow, which is going to be based on what you already have versus what you want to be. So many companies are trying to productize their service so that they can take it to the market in a slightly different way, whereas some are still continuing to operate in the same way. They've got what they've got. It's going to keep them going for the next year or so. Why not? Let's just keep it going. So, and some are changing different angles. So some of the things are happening, and this is what we believe the market will look. We are not going to say it's going to accelerate, but we are only going to see the current reactions. Depending on the current reaction as of September, this is how we are going to see. The accelerators are going to score more, but it won't be exponentially more because they are in a digital wave. Whereas the observers, will be just about making okay because they cannot observe for far too long. If they don't start to take any action from end this quarter, early next quarter, then they will be slowly starting to hit a dip, and that will add a pressure and they will come to the survivor zone. Whereas the survivors, if they then decide, okay, Q2, next year we are going to try a different strategic planning, then we are going to position ourselves slightly differently with account segmentation, partnership, customer experience, digital, you name it, all the stuff that we talked about. Then they will start to have the curve. But either way, the question comes is the curve. So the curve. So I just close this by saying it's not just us. It's not just COVID that we're talking about. We also have European Union exit, and regardless whatever happens, we are going to come out of it, which means people are actually overlooking this. Many companies, right or wrong, so much is happening around us. So the impact of European Union is something that we have been talking for a very long time, for 3 years at least. It's again going to come and hit us in Q1 next year. And it might not affect you immediately, but believe me, your buyers, the graph we saw, um, they will be affected at varied length. When they are affected, they might be having a plan for COVID, but as they always say, you just need to have one issue in your body, and when something happens, everything start to connect, and then you have multiple organ failure. That might happen to the market. You add COVID, you add European Union exit, and then you had Scotland referendum or Scottish election that's going to come in Q2 next year. Come out with COP25, the conference for climate change and stuff. There is a lot of pressure points in the industry. Again, it depends on reactions and how the reactions go forward. But either way, conclusion is exactly the same after 1 month into COVID. There will be a lot of polarization. The noise that you saw 1 month after COVID of look at us clapping, all the stuff is all gone. Now it's all realism, total realism. You won't find much people talking about see how good we are. The moment they say that, then they'll be at the mercy of the hedge funds and others who will be willing to hit them big time. And now you have seen those things come because it now they have seen, now they're pulled out of the market to a certain extent, but still they have furloughed their staff, they have reduced all the cost, but still investors still got what they are getting, right? They are still being paid dividends and other things. So those things will continue to exist, continue to do that, but you're going to find a growing polarization of winners and losers that could be between your survivors versus accelerators. And what that meant is everybody is still adapting, but the gap will continue to widen. So creating your 2021 plan will now be based on multiple practices. One, there is an existing outsourced database, which means what market has already been outsourced. It's a very simple segmentation of, do I need to play with that? Or if I know who my current clients are, I take my list first and understand these are the clients I already have it. Do I have to play in this market? Do I need to go with similar markets? If so, let me boost my pipeline. So that's in my control. And if I need to boost my pipeline, what type of sales team do I need? How am I going to approach that? Done. While you're doing all those stuff, segmenting your customers, talking, having conversations with your thing, this is what's going to happen. Your survivors will be behaving the same way, I assume. Your observers, if they continue to behave in the same way, and your accelerators will continue to behave in the same way, you're going to see 9% of the market flipping over by next year, which means these companies will not exist exactly same time next year. So some will try to move into observers, but some will try to move from observers and accelerate. Either way, the number of people who are on the accelerator, I don't anticipate crossing more than 15% of the market. So observers will still continue to be observers. They'll be much more tactical. Whereas survivors is what? But either way, they will start to react very, very differently in the market. Depending on the reactions of the market positions will vary. So that's my landing point here. As I mentioned, there is the detail IFM article around it, which will be published later this week. But what we see here is COVID-19, the FM landscape is very different now. How long does the test and trace contracts will provide lifeline to the big players? We don't know, but it will be there. It will be there, and even COVID vaccine comes up, but at least it's provided lifeline. But then many of the providers have managed to mind their accounts. Many of the providers have managed to beat the marketing. All these things meant same time 2021, we will continue to make this on a quarterly basis to understand who are the survivors, who are the observers, who are the accelerators. But they are constrained environment. They cannot do more unless their buying environment changes. So it's not survivors are going to be survivors. Unless they come out of the market or do something differently, they're going to go down in the same way. So if a pizza restaurant is suddenly making a sushi restaurant in the high street, if the pubs have suddenly been converted into theaters, so the theaters have been converted into pubs, that's survival. But what that meant is that helps them to go. So you are going to find all these things that's hitting in the market. So the key point here is this: don't underestimate the opportunity of reaction to the shock and reaction to the reactions, because that will what dictate. There is a lot of gaps in the market now. People who have been playing in the market are pulling out, but they are not telling they are pulled out. People who have been bidding heavily using their old engine is now not fit for purpose because the market is very, very different. People who never had account management, they all are working on account management and stuff. So either way, They before the recession, 2021, but now it looks like it will even go 2022. So either way, whether it's V shape or U shape or W shape or L shape, you have to lean into the curve and keep an eye on the curve and keep an eye on the reactions to the people, or your colleagues and other things, and position your structure from there. I know I slightly went over. I should have finished 45 minutes, but we are back with a webinar cycle. As you know, next year, Q2 2021, all the projects, Q3, all the projects that's coming out of the market will be hitting big time, which means many providers will be having capacity issues. Or, how many people do I need in my big team? How am I going to have the plugging gap? So the next webinar will be about intelligent proposal development centers. As you know, what could you do now to maximize success in a year's time or the next 9 months' time? Then we are going into virtual roundtable where many buyers are taking view on, who are the survivors, who are this, who are that, and it's just to take a stab on that. Then we continue to move into work from home and its impact and advanced workplace strategies and stuff. From our community, rather than to have something that's top line. But hope it was useful. And if there is any questions, put it on a chat box and I will respond to it as quickly as possible. Or you can always contact me offline to discuss it. This is what I want to say. Stay safe and continue to do what you are doing. But the market is